Hello and welcome. In this video, we will learn some more rules that we need to follow while we mark the supply and demand zones. Okay? Now, before I explain you the rules, let us quickly recap the things that we have learnt in the previous videos. Alright? What do we do first? We first look for a pattern, either continuation pattern or reversal pattern. Now here we have a reversal pattern, and this is a drop, base, 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 rally pattern, and this is a reversal pattern. Alright. Now what do? We mark the zone like this. And what zone is this? This is a demand zone. Alright. Now, after we mark the zone like this, what do? We wait till the price comes back to this level once again. And when it comes to this level, we go on a long trade, meaning we buy something. It can be anything. It can be a currency, it can be futures, it can be options or any other thing. Okay. So when it comes to this level, we take an entry in the long direction and we keep this as our stop loss. And most of the times that is what happens. Alright. Next, this is a supply setup. We look out for a pattern, and here we have rally, base, base, base and drop. And when we find a setup, we mark the zone and wait for the price to come back to that level. And when it comes to this level, we take an entry in short direction. Correct? While keeping this as the stop loss. And this is what happens in most of the case. Alright. So this is what we have learned till now. Correct? Now, there are few more rules that we need to learn before we can mark this zone. Let us proceed and learn them. We have a drop, base, rally setup here. Correct? This is our leg in candle and this is our leg out candle. And what do we mark here? We mark the demand zone here. Right? But then we will not be considering this for demand zone, because what we want is two leg out candles. Okay, we want two leg out candles. Here we have leg in candle, here we have leg out candle. This is not a leg out candle, this is a base candle. And this is a leg out candle, but this is not a good leg out. We have talked about good rally candles and bad rally candles, good base candles and bad base candles. Correct? This is not a good rally candle. So in this setup, we have only one leg out. And if we have one leg out, then we will not consider it for marking the zone. So even if we have a drop, base, rally setup here, we will discard it because we do not have two leg out candles here. Alright. Next, we have drop, base, rally setup. We will consider this setup to mark the zones because we have two leg outs in this setup. Leg in, leg out, leg out. And this leg out is a very good leg out too. You can see this is a good rally candle. this is a good rally candle. And if we have minimum of 2 leg out candles, then we will consider it for marking the zone. Alright, so this is our next rule. We consider a setup for marking a zone only if it has a minimum of 2 leg outs. Let me take one more example. I have a drop base rally setup. Should I go ahead and mark the demand zone? No, because I have only one leg out candle here. So what should I do? I have to wait. Let us see what happens. The next candle is base candle. This is fine. Next candle is rally candle. And now I have 2 leg outs. This is one leg out. This is one leg out. It is not that we need 2 successive leg outs. No. It can be one leg out and couple of base candles and then one more leg out. So this is fine. So we can consider this for marking the zone. Okay, we can mark the zone like this. Why? Because we have 2 leg out candles. Now we have one more zone here. Which zone? This zone, and this is of rally base rally setup. But do we consider this zone right now? No, because this rally base rally setup has only one leg out. This is the leg in candle of rally base rally setup. This is the leg in candle and this is the leg out candle. Okay. If you consider this setup, this is leg in, this is leg out, this is also leg out. Okay. But if you consider this setup, this is leg in, this is base, this is leg out. So what do? We wait for one more leg out candle so that we can consider this as a valid zone. So now we have one leg in candle and 2 leg out candles. We want minimum of 2 leg out candles. Now we can consider this as a demand zone. Okay. So if the price comes here, we will trade it. If the price comes to this zone also, we will trade it. How many leg outs does the entire setup have? Meaning this setup, drop base rally setup, it has 1, 2, 3 leg outs. How many leg outs does rally base rally have? It has 2 leg outs. Okay. Next, this is a rally base drop setup. If we find this setup, do we go ahead and mark the supply zone here? No. Why? Because we only have one leg out candle here. This is leg in, this is leg out. We only have one leg out candle here. We want minimum 2 leg outs. So what do? We wait for one more leg out. So we have one more leg out here. Now we can consider this as a supply zone. So we will mark it, and if the price comes to this level, we will take a short entry. Let us see what has happened. A base candle. And then what has happened? A drop candle. So now this is a drop base drop setup. But do we consider this as a valid zone? Valid supply zone? No. Why? Why? Because this drop base drop setup has only one leg out. Okay, if you see here, we have one, two leggings, base, one leg out. Okay, what we want is a minimum of 2 leg outs. So right now we cannot consider this as a valid supply zone. So what can we do? We can wait. What do we have next? We have a drop candle, which is a leg out candle. So we have leg in, leg out, leg out. And now since we have 2 leg outs, we can consider this as a valid supply zone. Meaning, if the price comes back to this level, we will take an entry. If the price comes back to this level, we will take an entry. Alright? I hope the concept is clear. Let me proceed to the next one. Here, if you see, we have a drop candle, then a rally candle and a rally candle. Sometimes we get setups like this too. What is missing here? Base candle is missing here. Correct? Sometimes we get setups like this where the base candles will be missing. Price will come down and quickly the price will move up. This will happen too. And if that happens, you can trade this too. Okay? You can mark the zone like this and take a trade if all the other conditions are satisfied. Okay? Same goes for this. We have 2 rally candles and then suddenly we have a drop candle and a drop candle. The base candle is missing here. The price went up and the sellers quickly pushed the price down. So base is missing here. This can happen too. And if this happens, you can mark the zone like this and trade it if the price comes back to this level and it satisfies every other conditions. Alright? Yes. Now let me go to my Zerodha dashboard and take few charts as example and show you all these things. Alright? Alright. So I am in my Zerodha dashboard and I have opened the chart of Ashok Leyland and this is a 5 minutes chart. Okay? This is the current market price and now let us analyze the chart. Here I have a rally, base, rally, drop. I have a rally drop setup, meaning the one without base candle, which I explained just now. But can we consider this for marking a zone? Let us see. We have a drop, we have base, and we have base. What do we want? We want minimum 2 leg outs. But here we have only 1 leg out. These are all leg-ins. We have only 1 leg out and so this cannot be considered for marking the zone. Okay. Now, here we have a rally candle, base, rally and a rally. We have leg in, base, leg out and leg out. So we have minimum 2 leg outs here and we can consider this for marking the zone. Alright, we will not mark the zone just now because we have few more rules to learn. Alright, so we will not mark it but we will consider it for marking the zone. Now, if we consider this, we have rally, base, drop. Okay, this is a rally, this is a drop candle but not a good drop candle and so we consider it to be a base itself. This is a rally candle but not a good rally candle and so we consider it to be a base itself. Okay, so rally, rally, base, 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 and drop. But do we consider this for marking the zone? No. Why? Why? Because it has only one leg out. What do we want? We want minimum of two leg outs. So leg in, leg in, leg in, leg in, one leg out. So we will not consider it. Okay. Let me proceed further. And yes. Yes. So we have a leg in candle, a leg in candle, base candle, leg out candle, base candle, leg out candle. So can we consider this setup for marking the zone here? Yes, we can. We have two leg outs here. Alright. And then what do we have? We have a base, base, rally, and then we have a base and then drop. Okay. So we can consider this for marking the zone. Let me go back. Let me go back. And what do we have here? We have rally and base drop. Rally, base, drop. A drop, base, base, drop, base, 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 rally. Rally, base, rally. Can we consider this for demand zone? Yes, we can. We have one leg out, one more leg out, one more leg out. So we have three leg outs here. Can we consider this for supply? We have one leg out, one leg in. This is base, two leg outs. So this can be considered for supply. Okay. Then what do we have? We have a rally, base, drop. And then we have base, drop, drop, base, drop. One leg in and how many leg outs? 1, 2, 3, 4 leg outs. Okay. So we can consider this for marking the zone. Alright. Yes. So let me go to a different chart. Coal India. Alright. So we have drop here, base, drop. Okay. We cannot consider this drop, base, drop setup because we have only one leg out here. This is leg in, this is, let me zoom in. This is leg in, base, leg out. So only one leg out, so we will not consider this setup. Let me consider the drop, base, base, rally, rally. So we have two leg outs and we can consider this for marking the zone. Okay. So if we come here, rally, base, base, drop, drop, base, base, drop, base, base, drop. So we have multiple leg outs and we can consider this for marking the zone. Alright. Now we have rally, base, drop, and this is not a good drop. Alright. So we cannot consider this. Now drop, base, base, rally, base. This can be a base or a rally, rally, rally. So we have multiple rallies and so we can consider this for marking the zone. Alright. Now let me take one index, Nifty Bank, Nifty Bank. Alright. Okay. So if you can see here, this is rally, base, base, drop. Okay. Then we have multiple bases. This is not rally. See, this is rally. Okay. This is rally, base, rally. Rally, base, rally. Base, base, drop. Base, 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 base. And this we do not consider for anything because see, it is happening while the price is consolidating, meaning this candle is in the range of here to here. This is not rally. If we wanted, if this candle should be meaning if you want to consider this as a rally candle, the price must go up. Okay, from here it must go up. Now it is not going up, it is in this range itself. Okay, and this is not a drop also, because once again it is in this price range itself. If we have to consider this as a drop, then the price must come down from this level. Okay, from this level, from this leg out level. All right, which is not happening, so we will not consider this as a leg out. So we have a rally base rally, we will not consider this because we have only one leg out, which is this. If we consider rally base drop, then we will not consider this for marking the zone because we have only one leg out. All right, so minimum 2 leg outs must be there. I hope you have understood the concept. Now I will stop here, and what I want you to do is open up few charts and look for setups which have multiple leg outs. Alright, so I'll see you in the next video. Till then, take care and thank you for watching.